So everybody, welcome to eLearn Market Presents Elliot Wave Principle webinar. I am Kavita Chamaria and I will be your presenter. I hope these are the attendees. We could have waited for some, but since it's already 5:30, I think we should start now. Alright, just a few things. The Elliott Wave is a very vast study and a pretty complicated concept. Alright, so the screen is visible. Okay, so the screen is made visible. What I was saying is Elliott Wave is a very complicated concept, and I have tried to divide the entire topic into 6 broad headings, and we will be touching upon them. For those with any questions, you can ask questions about any parts after the part has ended to avoid confusion and overlapping. So, okay, it's 5:30, so let's start. So Elliott Wave Principle was discovered by Mr. Ralph Nelson. He stated that the wave principles, the wave or patterns, they link together to form larger versions of themselves. Alright, and they link together to form the same patterns of the next larger size, producing a structured progression. This fractal behavior is inherent in the price movements and can be studied on charts. I can absolutely expect that this concept completely went over your head if you're okay, so the voice is breaking. Does it help if I talk at slower momentum, at slower speed? Any inputs? Alright, ma'am, still the voice is breaking. Okay, I'll try to keep my voice steady. Okay, so let's start. Now, what is a wave principle? We've seen in some charts that prices, they moves in waves or ripples. Now, these waves are in progression and they come together to form waves of larger degrees. Alright. So what R.N. Elliott did, he studied the market and he put some discipline into, or he just defined what he observed in the price movements. And what he observed is something which is universal, and it can be observed in not just stock market but also in the commodities, in the currencies, or in any other price which can be plotted on the charts. Alright, so another thing, Elliott Waves is more than a discipline, it's a psychology. Alright, it's not so much of a science or an art, it's more of a psychological study of the participants of the market. So we'll start with the basic tenets of Elliott Waves. In the basic tenets, we will be discussing 3 tenets. The first one being the 5-wave pattern. Market progresses in a 5-wave form, labeled 1 to 5 as visible in this diagram. The effect, so this 5-wave form, it affects the directional movement, whereas the wave, which is labeled 2 and 4, they separate the waves and are called the counter trend interruptions. So what has been said, in Elliott waves, progression happens in the form of 5 waves. And in the out of these 5 waves, waves 1, wave 3 and wave 5, they give effect to the directional movement, whereas wave 2 and wave 4 can be called rest waves or counter trend interruptions. The second tenet is the wave mode. There are 2 wave modes, the motive wave and the corrective wave. So the motive wave comprises of 5 waves and it is in the direction of one wave, 1 degree larger wave. In the beginning, it is very much possible that you get a bit confused with the terms, but I request you to stay with me, keep patience and pay attention. So motive wave and corrective wave. For now, just know that motive waves are comprised of 5 waves and corrective waves are comprised of 3 waves. The motive waves help the market progress, whereas the corrective waves interrupt the progression. The third tenet is a complete cycle. What completes one cycle? One complete cycle consists of 8 waves. We've studied about 5 waves, we've studied about 3 waves, 5 plus 3, 8 waves. If we bring together the motive wave over here, this is the motive wave. If we bring together this motive wave and this corrective wave, what we get is one cycle. In a 5-wave motive wave, the subwaves are denoted by numbers and the subwaves of the 3-wave corrective phase are denoted by letters. So if we have to mark this particular motive wave, the wave drawn in green, it would be 1, 2, 3, 4 and 5. Alright, so that would be 5. So the motive wave is numbered, whereas the corrective wave is marked alphabetically with A, B and C. And this comprises of the complete cycle. Over here we have a more defined wave, alright. So we can see clearly that this is the motive wave, followed by corrective wave, followed by motive wave, followed by corrective wave, another motive wave, and this all in all is one big motive wave. 2.5 cycles comprise of this bigger motive wave. So we'll go in more details shortly. So there are 3 consistent aspects of Elliott Wave Principle. And these 3 consistent aspects are like the building stones. Alright, so why is C marked at the low unlike B that is marked at higher point? Okay, so let's just go back a little bit. Okay, so over here in this particular corrective wave, you can see this entire wave is wave A. This, what is coming down is wave A. This entire wave is wave B. Now it will be wave B irrespective of the fact whether you're marking it over here or over here. And this is wave C. So you can mark it. Is anybody else having audio issues like Vinay? Please reply with a yes. Anyone? Alright, so moving on, I hope I've answered the question about wave B and wave C. So we'll move on to the 3 consistent aspects of Elliott Wave Principle. The first very important aspect is that wave 2 never moves beyond the start of wave 1. Alright, so I'm going to draw over here for you. This is wave 1. Alright. Wave 2 goes down, correcting wave 1, but the first consistent aspect says that this wave 2 will never move beyond the start of wave 1, which is this level. The second aspect is that wave 3 is never the shortest wave. So wave 1 can be larger than wave 3, wave 5 can be larger than wave 3, but both wave 1 and wave 5 cannot be larger. Wave 3 should never be the shortest. And the third one is that wave 4 never enters the price territory of wave 1, which means that if wave 1 ends over here, then this is the maximum wave 4 can travel. It should not travel anywhere beyond this particular level. And if you get a counting in which wave 4 is traveling anywhere beyond this territory of wave 1, then your counts are mistaken and you need to recount. So these are the 3 golden rules or the 3 founding stones of the Elliott Wave Principle. If you are an enthusiast in the field of Elliott Wave, or if you are interested to pursue this, then these three rules should be on your fingertips, on the tip of your tongue at any point of time. Now let's talk about the wave modes. So we've already discussed there is the motive wave, the corrective wave, and the motive wave has 5 structure. It is a 5-wave structure, and it's a very powerful wave, and it impels the market in the intended direction. Whereas the corrective wave has a 3-wave structure. It is the counter trend interruptions, and it accomplishes only a partial retracement or correction of the progress achieved by the preceding impulsive wave. Lots of big terms, very confusing. Let's go in details. Alright, so this is our motive wave, and we can divide it into, say, 5 waves like this. Now there comes a corrective wave. Alright, so this is our corrective wave, which has a 3-wave structure. Alright, and this 3-wave structure is going to retrace. Alright, this is retracing movement. Retrace only a partial, not a complete, a partial. It is going to retrace this particular motive wave only partially. Alright, so it's also called the impulsive wave. This wave, we'll go into more details on that in the later slides, but right now you have to understand these characteristics about corrective waves. So moving on, let's look at what we've discussed on the daily chart of Nifty, showing one entire cycle. So this is a 31 months long cycle which started on the August of 2013 and has ended somewhere around February 2016 according to me. This is my own counting. Starting in August 2013, we saw that what started a very strong bull market over here from the level of 5200 took Nifty to the level of 9,000, and it can clearly be divided into 5 distinct waves. Now this was the level where there was extreme positivity, and nobody was talking about the level of 9,000 but the level of 10,000 and 11,000 and so on. But what happened? Nifty fell down to the level of 6,800. And what was the structure of Nifty? A huge motive wave followed by a huge corrective wave. So far, we've come almost to the end of part 1, and what were our important takeaways? Number 1, motive waves don't always lead upwards and corrective waves don't always lead downwards. What does this mean? If you have a bull market, motive wave is going to be up, corrective wave is going to be down. But what about in a bear market? Your motive wave is going to be downwards and your corrective wave is going to be upward, and it's going to be a 3-wave pattern. So that is what it means by motive waves doesn't always lead upward and corrective waves doesn't always lead downwards. But how will you determine whether it's a motive or a corrective wave, and what the definition? The answer is mode of wave is determined by the relative direction. Waves divide in motive mode, that is 5 waves, when trending in the same direction as a wave of one larger degree. Alright, so if this is the trend, alright, this one up, one down, one up, one down, one up and one down. So this is a 5-wave structure, alright, and it is affecting this particular structure, then this becomes the motive wave and this becomes the corrective wave. Within this entire wave, there can be 1, 2, 3, 4, 5, 1, 2, 3, 1, 2, 3, 4, 5, and 1, 2, 3. So that is how the market unfolds. Alright, so we have to keep in mind the direction of the one larger wave in order to determine the mode of the wave of which it is a part, and in corrective modes, that is 3 waves or a variation when trending in the opposite direction. So this is the end of part 1. Anybody questions? Please post your questions now. Market unfolds in a fractal form. This means that when the waves of 1 degree smaller has the same form and structure as the wave of 1 larger degree. Alright, so fractalism is something which can be observed at a huge scale on nature, from the tiniest cell formations to the formation of large galaxies. May it be the shape of a galaxy or the shape of shells or the arrangement of leaves, the same pattern can be observed in all shapes and all sizes, and this is called fractalism. If we focus on this particular picture, we can see that the shape of this leaf is reflected in the shape of this leaf and is reflected in the shape of this leaf as well. So this progression, this consistency in the form from various sizes is what is called fractal. Okay, so let's take in the questions. Surya has a question about, can corrective wave B cross the start of wave A? Surya, will come to your question later in the part where we will be discussing the corrective waves. Alright, so that's it. No other questions. So let's move on to the next part. We will be talking about the wave degrees. We've already seen that there are various degrees, and the degrees can last from up to hundreds and hundreds of years, from as back as financing and record keeping goes to as little as a few seconds. Alright, so the grand super cycle is the cycle which has been going on since the establishment of the human civilization and since the use of currency and money was started. Super cycle is 1 degree lesser than that. Now what we observe on the chart starts usually from the primary degree that goes down to the intermediate degree, which lasts, okay, so the primary degree lasts for a few years. The intermediate degree may last from a few months to a few years. The minor trends or the minor degree is observed on the scale of a few days, whereas the minute degree is, as the name suggests, seen on the intraday charts. Alright, over here we have an example. How do you decide which wave degree is perfectly suited for you? That depends on your investment horizon. For somebody who looks out for investment for years at a time, will refer to the primary wave degrees, and this is what you actually care about, the primary movement of the stock prices. You're not bothered about the movements which last, the changes in price which come for say a couple of weeks or so. Alright, whereas if you're a swing trader, you will follow the intermediate trend. Alright, and you will be observing the market in far more details than the primary degree. And the last comes the minor degree, in which the day-to-day fluctuations matter and it requires a great deal of exhaustion and a great deal of work to be defined. But then how are you going to mark the charts? So there are different numerical standards which are used to define the different, okay, so there is a bit of typo over here, but please ignore that. So different numericals are used to define the different degrees. Alright, if we look at this chart, right, so on this chart we can see that the primary, the largest degree over here is denoted by the numbers in this bracket. Alright, and 1 degree less is denoted in these brackets, and so on and so forth. We can see that the corrective waves everywhere are denoted by the letters. The motive waves are denoted by the numbers. And a very interesting thing over here, you can see that the larger degree ABC, the larger corrective wave, alright, ABC is the larger corrective wave. If we go 1 degree smaller, wave A is being marked by 1, 2, 3, 4, 5. So this becomes the motive wave. Why? Because a wave of 1 larger degree is trending downwards, and because the wave A is impelling the market to move in the direction of 1 larger degree, it has been marked as a motive waves and by the numbers 1, 2, 3, 4, 5. Okay, I'll change the cursor. Let's use the highlight. Okay, so these waves, over here we can see that wave A, B and C. The downside is the direction of the larger degree. Alright, so the waves of 1 degree smaller, that is 1, 2, 3, 4, 5, they become the motive wave, and the upside wave becomes the corrective wave. Why? Because a wave of 1 degree larger is trending downwards. So this part becomes the impulse in which this entire wave is trending. So this is the impulse part, and this entirely becomes the correction part. Now there are these numbers you can see on the chart. We'll be discussing about these numbers shortly. And this entire movement comprises of one complete market cycle. So we are moving on to part 3. If anybody's got questions, they can ask now. Shankar, I hope the cursor is now visible to you. Alright, so the motive waves. We are going to discuss in details the motive waves and the corrective waves. So the motive waves has two variations. One is the impulse and the second is the diagonal. Discussing about the first variation, that is the impulse. Yes, Conrad, that is correct. Impulse, correction, and then impulse in the same direction as previous. Yes. Alright, characteristics of an impulse. The general attributes for an impulse are a wave which moves in the direction of the trend of one larger degree is called an impulse wave. In an impulse wave, waves 1, 3 and 5, waves 1, 3 and 5 in a motive wave are usually impulse waves. Wave 1, wave 3 and wave 5. This is wave 1, this is wave 3 and this is wave 5. So these are our impulse waves. Impulse waves can be further subdivided into 5 waves. That is, they can further be subdivided into 5 waves like this, and like this. Now for the impulse waves, there are some mandatory conditions. As we already saw that there are two variations of a motive wave, the impulse and the diagonal. So for an impulse to be called an impulse, there are some mandatory conditions, which are wave 2 should not retrace wave 1 correctly. So wave 1 should not retrace wave 1 completely. That means wave 2 should not move beyond the starting of wave 1. This is the limit. Wave 4 should not retrace wave 3 completely. Wave 4 cannot go beyond wave 3, and wave 4 cannot also enter the territory of wave 1. And the top of wave 3 should be higher than the top of wave 1 naturally, and the wave 3 is never the shortest among the wave 1, 3 and 5. So you must be thinking that these are the same categories which we discussed for the motive wave. These are the particular characteristics for an impulse. We will be seeing diagonal very soon, and you will be understanding the significance of these definitions soon enough. Now this is a graph showing the impulse waves. So this becomes our motive wave, and wave 1, wave 3 and wave 5 are the impulse waves, in which wave 1 has been subdivided into 5 waves, wave 3 has been subdivided into 5 waves, and so has a wave 5. Impulse waves are also called actionary waves. Now going on to the diagonals. On this chart you can see on this diagram. So diagonals also have the general form of 5 waves. Alright. The formation of a diagonal suggests exhaustion of the prevailing trend, and they are generally formed after a very sharp move. Usually the wave 5, that is the last impulse, the last wave of the motive wave is observed as a diagonal and usually is seen when the wave 3 is a very sharp upside movement and it shows exhaustion in the traders or the investors. Within a diagonal, all the waves are in counts of 3, 3, 3, 3, 3 instead of the 5, 3, 5, 3, 5 structure which we've seen so far. A rising ending diagonal in an uptrend is a very bearish signal and leads to sharp reversals. So what do we see? That diagonals are followed, diagonals not just follow sharp movements but they are also followed by sharp reversals. Now we'll talk about some variations in the impulse wave and some phenomenon which can be observed. The first one are called extensions. Extensions are elongated impulses with exaggerated subdivision. So on this diagram we can see there is the usual 5-wave structure, alright. This is wave 1, 2, 3, 4, 5. But within this 5-wave structure, wave 3 over here is extended. That is, it has exaggerated markings. Now, if we look into details of these waves, then wave 1 will be divided into 5 waves. Wave 2 will go 3. Then these inside waves of 1, 2, 3, 4 and the 5th of the wave 3 will also be subdivided. So, alright, one thing, spotting an extension is usually very difficult and you don't need to know exactly which wave is going into an extension. What you can simply do, if you're counting and if you're getting the count of 9 waves, wave 1, 2, 3, 4, 5, 6, 7, 8, 9. If you're getting a count of 9 waves, you can understand that it's an extension and you can carry on with your counting. Majority of impulse waves do contain an extension in one of the 3 impulsive subwaves. Alright, so majority of times you'll see there are extensions. Now naturally when you're looking at a chart, all the charts are not exactly the same. There are variations and the extensions and further we'll be seeing truncation. These are what bring differences among the charts and the prices. So extensions are a very, very common phenomenon in the market. If you go look at a chart and count, you'll often observe an extension very commonly. Most commonly, extensions are observed in wave 3 because wave 3s are very powerful, and extensions may also occur within extensions. And so on this diagram we can see the different waves extended. We've got wave 1. Okay, so there is a problem with the audio. So give me a minute, I'll have a check with the tech team. So we are back and I hope the audio issue has been solved. I request everybody to type in a yes or okay if everybody can listen to my voice without break and without disturbances. Okay, so I suppose that is everybody. So moving on, we were talking about the impulse wave variations and the various phenomena. We've already discussed about extensions. So extensions, the last point we were discussing is that extensions may occur within extensions. And the phenomenon of extension is what makes every chart unique and different. Extensions may occur in impulse. Impulses are parts of motive waves. Motive waves are part of motive waves of larger degree and corrective waves. So thereby extensions can occur in corrective waves as well. Moving on, we will talk about truncation. Now, since we've already discussed that extensions are exaggerations, truncations are exactly opposite. They signify the short falling of a wave. A truncation pattern is formed when the wave 5 is not able to break above the highs of wave 3, which is signified by this particular line. Generally happens following a strong wave 3. So the point to keep note is that when you have very strong and enhanced and very extended wave 3, then wave 5 will either be a diagonal or it will be truncated. That is, a diagonal and a truncation, they both signify weakness and exhaustion, and following both there are deep corrections. Moving on to the third point, verified by noting that the presumed fifth wave contains the necessary 5 subwaves. So the 5 wave is still approaching the top of wave 3. How will you determine that it is a truncated wave 5? You will look out for the division of wave 5 into 5 waves. Okay, so one thing about Elliott, it is very, very dangerous to try and predict the ending of waves. Alright, the easiest wave to predict is wave 3 and wave 4. But if you go into corrections, trying to predict them, it becomes very difficult, and we will be discussing more in details when we talk about wave personalities. So done with truncation, we talk about corrective waves in details. Anybody got any questions about motive waves can post the questions. Yes, exactly. The formation of a truncation is what we can easily call double tops, but double tops can also form by combination of other waves, like the top of a wave 5 and the top of a wave B in case of an extended wave B. Like so you've got this motive wave and you've got this corrective wave. Now, so this is the end of wave 5. Okay, that's messy. So this is the end of wave 5 over here, and this goes wave A. The wave B which comes, if it completely retraces the wave A, then what you get is a double top. And the other scenario in which a double top can be formed is when the wave 3 is tall enough and the wave 5 is truncated, then you can get a double top. And if both the phenomenon happen together, that is wave 3, wave 5 and wave B ending at the same place, you get a triple top. So moving on to the characteristics of, alright, moving on to the characteristics of the corrective waves. Corrective waves move against the broader trend which we've already seen, less predictable, hence higher flexibility in analysis is required. That is, it is very risky to predict the ending and starting of the corrective waves. Corrections are never in 5 waves but in 3 waves. 2 types of corrective processes. So corrective waves can either be sharp, in which they correct almost, so this is the motive wave and there are correction comes. So it can either be sharp, in which it corrects almost 33 to 80% of this motive wave, or they can be sideways correction, in which the motive wave is not completely corrected or met with the consolidation, and there comes a retracement of up to 33%. That is called a sideways or a choppy correction. So there are 3 types of corrective waves. The first and the most commonly observed is the zigzag, which leads to sharp corrections. Zigzags have the formation, the pattern of 5, 3, 5. Motive wave followed by corrective wave followed by a motive wave. Alright, so what happens is that the wave A, so the motive wave has come here and one larger degree and it has ended. Alright, so the fifth wave has ended over here and the wave A is starting from here, and this will be divided into a 5 wave structure. Wave B will be a 3 wave structure and wave C will be another 5 wave structure. So this is the zigzag. Then we have the flat. The flat comprises of a structure of 3, 5, 3. That is, wave A is a 3 wave structure, Alright, then wave B is also a 3-wave structure as shown, and then wave C comes in as a 5-wave structure, and what happens that this leads to a shallow correction or a choppy or a sideways correction. The last category is the triangle, which is a complex correction. Over here we see a 5-wave form which comprises of 3, 3, 3, 3, 3. Now we saw a similar formation, a similar, what can you call it, similar variation when we were discussing about the motive wave. We called it diagonal, and in corrective waves the diagonal is also referred to as the triangle. Going more in details about zigzag, 3-wave corrective pattern labeled ABC and results in considerable correction on the previous motive wave. So here was the motive wave 1, 2, 3, 4, 5, and it results in a considerable correction of this motive wave. The top of wave B is lower than the beginning of wave A. This is a compulsory criteria that the top of wave B should be lower than the top of wave A. Wave A and C can be divided into 5 subwaves, and wave B can be divided into 3 subwaves. Occasionally, zigzags will occur twice or at most 3 times in succession. Now, what we are discussing is a bit complicated, so please pay attention. We will be discussing about double zigzags. What is a double zigzag? It is a pattern which occurs when two zigzags occur back to back, interrupted by a 3. Double zigzag is 2 of the zigzags pasted together with a 3 in between. A double or triple zigzag are similar to an extension of an impulse wave. We discussed while discussing extensions that they can be observed in corrective waves as well, and this is where it comes in. The zigzags are labeled WXY. Alright, so this is one zigzag, this is the 3, 1, 2, 3, and this is a zigzag. Now on the zigzag you can clearly see the breakup, the 5, 3, 5 wave. This is a 5-wave breakup, this is a 3-wave breakup, and this is a 5-wave breakup again. Then there will be a simple interruption of a simple 3-wave interruption called a 3, and then again we've got a zigzag with a 5, 3, 5 breakup. Let's start the discussion about a flat which has a 3, 3, 5 breakup. This is a 3-wave corrective pattern. Wave B ends close to the beginning of wave A and wave C. Alright, so this is where wave A ends, and wave B can end either close to wave A, or it can even pass the beginning of wave A and end higher. And wave C comes down and it ends either near wave A, or it can cross over below the beginning point of wave A. Waves A and B are in 3 waves, wave C is in 5 waves. 3, 3, 3, so A and B are in 3 and C is in 5. Complex corrections can take the form of a double or a triple flat, or combinations of flats and other corrective patterns joined by the X wave. Okay, so flats has more variations. The 3 types of flats are the regular, the expanded, and the running flat. So this is very high level. I won't go into the details. If you do want to go into details of this, I will suggest you a book, Elliot Wave Principles, Key to Market Behavior by Frost and Fletcher. I'll be typing in the name of this particular book at the end of this webinar. So let's move on to the next segment, but before that, anybody's got questions about motive and corrective waves, please post your questions. Then we'll discuss about triangles. Alright, so let's get on with triangles. Triangles are also corrective patterns, and they are consolidation patterns which consist of 5 waves. So flats and zigzags have 3 waves, triangles have 5 waves. Each of the 5 waves is subdivided into 3 subwaves. And triangles are very complex corrections and they may be combined with other triangles. There might be triangles within triangles and other competitive patterns joined by those 3's or x waves. Now, when triangles and complex triangles are formed in stocks or commodities or in any security, that particular security can be observed to be consolidating for many, many years, and it is fairly difficult to define the legs of these triangles. All right. So over here we have an example of a triangle. We can see this is where the triangle starts from. It breaks into a 3-wave formation, another 3-wave formation, 3-wave, 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 and then a breakout. So if within this 3-wave 3-3-3-3-3 formation there are other triangle combinations, it becomes a very complicated pattern. Alright, so we have a question by Surya Narayan Parida. What percentage waves are moved? Alright, what percentage waves are moved? To Mr. Surya, I could not get your question. Please elaborate a little bit. And Bhargav wants to know, could you please show example of diagonal extension? Okay, I'll be showing it to you in a while. Conrad Segi, wouldn't this be the impulse sideways impulse breakout on the upside? It looks like I've been missing the questions. Wouldn't this be also impulse? Conrad, I request you to please ask your question. Vinay, if you want the PDF, you can drop in your email. I'll make sure that it is emailed to you. Elliott waves can be used in daily, weekly, monthly, yearly, minute, hourly, any period of chart. Triangle occurred in wave 2 and wave 4 or in all corrections. No, triangles occur either in wave 2 or in wave, in wave 2 and wave 4, but not in both. They can occur in either of them, but not in both. When I send in your email address if you want the PDF. Conrad, are you talking about the Nifty chart which I was showing? Triangles can also occur in wave B, right? Yes, Rain, they can. Okay, let's see. All waves including 1 to 5 and A to C are moving in what percentage to each other, means how much will one move? Okay, that is a very good question, and we will be talking about the proportions and ratios in the coming portions. I have slides ready on that, so we will be discussing about that. Please be patient. Examples a few slides prior. Let's look for them. Okay, fine, Conrad, you'll be taking the PDF. Very good. Alright, so we were at triangles. So let's move on to the part where we will be answering some questions about ratios. We'll be discussing Fibonacci and wave personalities. So what is a Fibonacci sequence? This Fibonacci is a very fascinating concept, and if you pay attention, it helps a lot in stock market analysis, and it gives amazing and foolproof levels sometimes. So what is a Fibonacci sequence? The Fibonacci numbers are as follows. Now this particular series, how can we derive this? These numbers are obtained by adding the two previous numbers in the sequence to obtain the next higher number. And Fibonacci sequence is the series behind fractalism. We've discussed about fractals. If you look at this particular chart over here, okay. So if you look at this figure over here, what you see is the family tree of rabbits. All right, this side goes the generation, this side goes the number of rabbits, and what is very interesting is that the pattern is extremely repetitive. Okay, give me a minute. All right. Now over here you'll see the pattern which you see at the top, going to the left and to the right. Now if you move a step lower, that is exactly what you will notice at every single stage. So this larger picture is something which you can observe at every smaller stage. So this itself, the family tree of rabbits, is a fractal formation, and the person who discovered the Fibonacci series, this is how he discovered the Fibonacci series, by observing the family tree of rabbits. And yes, Conrad, you're right, Fibonacci numbers are everywhere around us, and it is a very amazing concept. Let's look into it in a little more details. So every third number. Now in this particular series, if you sit with a calculator, you will see that every third number is even, and the ratio between each number is 0.618, which is also called the golden ratio or the golden mean. And this particular ratio is what defines the entire universe, from the position of cells to galaxies to the proportion between your different body parts. Everything, everywhere is nothing but the golden ratio. The Fibonacci numbers and sequence can be observed in many different natural phenomena, from the design of galaxies to the arrangement of seeds on the sunflower head, the design of shells and pattern of leaves. We've got some examples, we'll look at them right away, but over here we've got, so on the top you can see the Fibonacci series, alright, and if you take ratios of each number with the preceding number, you come to these numbers, 1, 0.5, and after 0.5 onwards, what you see is that the ratios are tending towards the number which is 0.618. No matter you are at the beginning of the sequence or you are extremely at the end and tending towards infinity, the ratio remains constant at 0.618. If you inverse the number, what you get is 0.618, and that also remains consistent throughout the series. And we've discussed how to derive the series. Start with a 0 and start with a 1, and every time just go on adding the number with its predecessor, and the series goes on forever. The ratio remains consistent. Here are some examples of seeing the Fibonacci numbers or sequence in nature. If you calculate the distance between the seeds on the head of a sunflower, it comes to the ratio of 0.618. If you talk about position of galaxies or the shape of shells or the ways the hurricanes are formed, if you talk about even insects, if you talk about leaves, if you talk about flowers, everything has this consistent ratio of 0.618, and it's considered to be the most appealing ratio that is ever created by God. So what is the relation between Elliott waves and the Fibonacci ratios? So there are two major relations which are discussed. One is ratio analysis. The assessment of the proportionate relation in time and in amplitude of one wave to another is called ratio analysis. For example, In discerning or studying the stock market cycle, one may anticipate the ensuing correction will be 3/5 or 61.8% of the previous rise in both time and amplitude. In terms of time, the relationship may be less common, but years of studies have shown that in terms of amplitude, almost every wave is related to the amplitude of an adjacent, alternate, or component wave by one of the ratios between Fibonacci numbers. So on this chart you can see that, okay, just a second. So on the first figure which we have, this is the motor wave which divides into 5, followed by the corrective wave, and it is evident that this corrective wave has gone 0.618 or 61.8% of this entire motor wave. This is in case of, you can say, a zigzag. Alright, but what in the case of a flat? So the motor wave, and over here we've got the flat correction, and it is corrected 0.382. Now how do we get the number of 0.382? It is simply 1 minus 0.618. So after taking away 0.618, what remains is 0.382, 38.2%, and it is a very important number as well. Even in the case of extensions, you can easily observe relationships between the waves, between the length of waves. When we have the third wave extension, we can see here that this is a third wave and it is extended into 5 subdivisions. We see that in case of a third wave extension, wave 1 and wave 5 are equal in length. Alright. When we have the fifth wave extension, then the length of the entire fifth wave is equal to the length of wave 1 to wave 3. And in case of a first wave extension, we see that the entire length of the first wave is equal to 0.618 of the length from the beginning of wave 3 to the end of wave 5. So these ratios can be easily calculated and witnessed in charts and graphs with a calculator. Alright, so moving on, we will look at retracements now. More often than not, a correction retraces a Fibonacci percentage of the preceding wave. A sharp correction tends to often retrace 50 to 61.8%. Now we saw that 50 is also a Fibonacci number and 61.8 is itself the golden ratio. So it is very commonly observed that when a motive wave comes up, then the corrective wave which follows is usually either 50% or 61.8% of the preceding wave. Even within the motive wave, these corrections are also correcting the preceding impulse in a ratio which is akin to the Fibonacci ratio. Alright. So particularly, a sharp correction tends to often retrace 50 to 61.8% of the previous wave, particularly as wave 2 of an impulse. Leading diagonal in the place of wave 1 is an impulse is typically followed by a zigzag. Okay, so this should not be an impulse, it should be a motive wave. Are typically followed by a zigzag retracement of 78.6%. Please keep in mind that diagonals are usually weak, alright? And when diagonals come, maybe in the place of wave 1 or maybe in the place of wave 5, they are sharply corrected. The same is being said over here that when there is a leading diagonal in the place of wave 1 in a motive wave, They are typically followed by a zigzag retracement of 78.6%. Sideways corrections tend to retrace a maximum of 38.2%. Let's take an example at the live chart of Nifty, at the chart of Nifty. So on this chart, this is a monthly chart, and we've marked the level of the lowest level to the highest level, and if we take a retracement of this level, we see that where this motive wave ended was exactly the level of 61.8% retracement, and this is the low which was formed in the recent February. Alright, now if we have to take the retracement, the correction which the current move has made, please give me a minute. Alright, so we were talking about the chart of Nifty. So this particular correction which we've seen on this chart is what is being reflected on this chart on a daily time frame. So on the daily time frame, you can see that if we draw a Fibonacci retracement from the top of 9,000 to the bottom of 6,800, the prices currently lie at the level of 61.8% retracement again, and this is where Nifty has been facing a lot of resistance since the past few trading sessions. Moving on, we have come to wave part 5, where we will be discussing about wave personalities. If anybody has any questions about Fibonacci ratios and their relation to Elliott wave, you may post your questions. Okay, so wave personality. Okay. Um, Winner wants to know, is it from the top you have to draw? The peak plotting is done from bottom to top, correct, Conrad? The plotting of, alright, let's go back to the chart of Nifty. Alright, so on this chart you can see when you're plotting a Fibonacci retracement on a motive wave which is pointing upwards, you have to plot from the bottom, that's point A, to the top, which is point B. Alright, and if you are drawing a Fibonacci retracement on a corrective wave or a downward trending wave, then your plotting starts from the top and ends at the bottom. So it basically goes chronologically. You're going to start from older date and you're going to end your plotting at the more recent date. Conrad wants to know what Fibonacci percentage is considered most stronger. The strongest one is naturally the golden ratio, which is 61.8%. But then it is not a consistent ratio. You will often see that 38.2%, 50% and 78.6% also play a very important role, though not as important as 61.8%. If you study Nifty or any stock on the intraday basis on a chart of say a framework of 15 minutes or 20 minutes, 15 minutes or 1 hour or 2 hours, you will see 61.8% often leads to a reversal in the price movements and then the price resume in the usual direction. So Conrad, the answer to your question is that 61.8% is the most important Fibonacci retracement level, and other levels also play a major role. I hope I've answered your question. Yes, Conrad, those time frames will be very noisy, but then there are people who trade on shorter time frames. So what is the time horizon chart we have to take? It depends upon depends upon your trading horizon. For how long do you want to invest, or do you want to trade, or do you simply want to speculate? You can't really depend on 61.8% because in Fibonacci retracement there is a tendency that once a wave has retraced up to 61.8%, the next retracement will not be 61.8% but either 38.2 or 50%. So it keeps on changing, it does not really repeat itself. Okay, so let's move on. So we will start with the discussion of the wave personalities. Alright, so another question. Please give the count of waves from 8288 to 7927 from, alright, Surya. 7927 would be around from okay, you want the corrective wave? So this is you're talking about the recent high over here. And 7927? Or do you mean 6927? Surya? Eight two eight eight to 7927 would be till here. Over here, you mean this wave? From 23rd June 2016 to date. 23rd June 2016. Surya, if you want, I can send you a marking chart separately because right now I don't have that kind of chart with me. I don't have that recent chart with me. Upward sloping channel from 69. You can call it a channel or you can call it 6942 to 8283. It wouldn't exactly be a channel, it will be more of a triangle. Okay, let me just change the pen over here. Right. So it won't exactly form a channel. Okay. So no ink visible on black. Alright. So this is not exactly a channel because a channel ought to have parallel lines, and we can see that the lines are not exactly parallel on this chart. You can call it a broadening triangle if you will, but not a channel. Alright, so Hiren wants to know that happened recently, June 22nd high till June 23rd, 8160 will become support. Surya, I'm sorry, I don't have, I've already told you I don't have the chart for that since this was a screen capture. Low falls in line and highs to hence the chart. Okay, so let's move on. Let's talk about the wave personalities. So wave 1. What comprises of the wave 1? Extreme pessimism and lack of confidence. When a wave 1 starts, it is accompanied with a lot of pessimism and lack of confidence among the participants, recognition of survival and rebound from undervalued levels. When we come to wave 2, there is a test of lows, underlying trends. The underlying trend is considered to be down. There are really bad fundamentals and no new lows. Now what we are talking about, the wave personality or the psychology behind the development of waves. When a primary wave 1 is starting, like what we saw on the chart of Nifty around the time of August 2013, that was the very, very beginning. Those who were active in the market that time will remember the kind of environment that was there at that time. extreme pessimism, lack of confidence among the investors, and there is a recognition of survival, and there are rebound from the undervalued level, and that happens around this particular level. And when the wave 2 unfolds, it is actually a test of the lows. Alright, wave 2 can usually be very strong, um, can be very sharp retracements, and they may test the lows of wave 1. Wave 2 comprises of that fundamentals in the stock market, and new lows are usually not formed. Wave 3 is a powerful wave. It shows strength, it shows positive breadth, it shows the best fundamentals. It is usually also accompanied with very strong volumes, and wave 3 is never the shortest wave. It restores full confidence that the trend is up. Wave 4 is a surprising disappointment for the participants. It signals that the best part of the growth is over, though not many participants are able to anticipate that or understand that, and it does not enter the price territory of wave 1. Finally, wave 5 is the final advance. In the wave 5, we see a lot of euphoria, and there is a lot of optimism in the market, and everybody is cheering and everybody is singing praises for the stock market. There is definite market performance improvement, and fundamentals are also shining, but it is all overvaluation. Now, if we talk about the corrective wave breakdown, that is a wave A, B, and C. So there is a technical breakdown in the wave A. The break of trend lines. So if you draw a trend line from here at wave A, I'm sorry, this line is a bit crooked, not very good at drawing. So if you draw a trend line which joins the lows of wave 2 and wave 4, the trend line is breached at wave A, but then nobody is really ready to accept the fact. Everybody is in a state of denial at this point of wave A, and they all see it as an opportunity of buy on dips, and retail investors are the worst affected. So there is good news anticipated in the market, and the participants are overly bullish in sentiments. Wave B is an emotional advance. As we've already discussed, there's heavy buying from retailers, and that leads to an advance which results in the formation of a wave B, which is called an emotional advance. It results in non-confirmations in the fundamentals, and the fundamentals are considered to be weakened subtly, so subtly that not really noticed by majority of participants. There is a lack of confirmations, and there is very aggressive euphoria. Now, talking about wave C. Wave C is akin to wave 3 of the motive wave. It has more or less the same force, and this is the worst of the bear market, where people are completely convinced that the market is not going to rise, and they start panic selling. So there is complete collapse in the fundamentals, bad news begins to roll in and strike, and in response, there is absolute devastation in the stock market, and it has the properties of third waves. So that is it about the wave personalities. Moving on to the last part. Any questions, anybody, about wave personalities, any particular wave? Alright. Moving on to part 6, which is rules and guidelines for waves. So this is mostly a revision. We've come to the last part. I will be sharing the PPT with all the attendants. They can leave their email addresses if they require these particular PPTs or PDFs. I'll do the needful. Motive wave we've discussed in a lot of detail, so I'm not going over them again. Same about motive diagonals. Alright, a diagonal always subdivides into 5 waves, which we've already discussed, and the sub waves are broken into 3, 3, 3, 3 waves. Wave 4 never moves beyond the end of wave 2. The wave 4 always moves into the price territory. Alright, so this is different between the diagonal and an impulse. In an impulse, the wave 4 never moves into the price territory of wave 1, but in a diagonal, wave 4 always moves into the price territory of wave 1. In the contracting form, Wave 5 is shorter than wave 3, which is shorter than wave 1, and wave 4 is shorter than wave 2. A line drawn between the ends of wave 2 and 4 converge towards in the contracting form or diverge from in the expanding form, a line drawn between the end of wave 1 and 3. Waves 2 and 4 usually retrace 62 to 80% of the previous waves. This means that there is very sharp retracement between the waves, alright? So, so all subwaves subdivide into zigzags in a diagonal, alright? And there is sharp correction. So over here we can see this is wave 1 and it is sharply corrected by wave 2, which is again sharply corrected by wave 3, which is again sharply corrected by wave 4 and ending in 5. Usually waves 1, 2, 3, 4 and 5 are zigzags. Wave 5 might not be a zigzag and be a motive, but that is a rare case. Coming to corrective waves, discussing zigzags. Now zigzags, we've discussed the simple zigzag and the complex zigzag comprising of double or triple zigzags. A zigzag comprises 3 waves A, B, C with a breakup of 5, 3 and 5 waves. Wave A is an impulse or a leading diagonal. Wave B can be any corrective pattern. Wave B never goes beyond the start of wave A, which is a compulsory criteria for a wave for a zigzag pattern, and the wave C is an impulse or an ending diagonal. Talking about corrective waves flats, wave B usually retraces 100% to 138% of wave A, and wave C usually corrects about 100 to 162%. As long as wave A and ends beyond the end of wave A. A flat comprises of 3 waves A, B, C. Wave C is an impulse or ending diagonal. Wave B usually retraces about 100 and 138% of wave A, and wave C is usually 100 to 162% as long as wave A. Alright, so contracting triangles, at least there are at least 4 subwaves as zigzags, which we just discussed. So this is also a revision. Let's talk about expanding triangle. Alright, we are nearing the end of this presentation. Anybody with any questions can post your questions. So talking about expanding triangles, wave C, wave D and wave E move beyond the end of the previous same directional wave. A line connecting the ends of wave B and D diverges from a line drawn between the end of waves A and C. Waves B, C and D usually retrace between 120 and 125 of the previous wave. Yes, Vinay, you'll get the recordings on the YouTube channel of eLearn Markets and also on the Facebook page of eLearn Markets. And with that, we've come to the end of this Elliott Wave presentation. Now, Elliott Wave is a very lengthy topic. It is a very complicated discipline, and the best way to really learn or really study Elliott Waves is with charts and academics side by side. Alright, so we have a question in ending diagonal of wave 5 of any degree. How can we count ABC or complex pattern? Surya, the problem with corrective waves is that counting the waves as they develop is extremely difficult. So when you feel that you are being faced with a corrective wave, it is advisable to wait that correction out and not be active in the market at that particular time frame. An alternative to this is also to refer to a time frame which is larger than or shorter than your desired time frame. For example, if you're looking at the daily chart, alright, and the chart counts don't really make sense to you, what you can do is you can refer to the weekly chart and you can see for yourself how the degrees, how the waves of one larger degree are unfolding on the weekly chart, and then you can fit in your daily chart countings into the weekly chart, and that is one way. And the other way is to go down to the hourly or the 2-day 3-day chart, the 4-hourly chart, and then try to make sense of the counting which you get. So that is one way, and in a correction it is very, very difficult to determine because it is very complex and a lot of flexibility in the analysis is required when studying the corrective waves. Thank you so much, Conrad. All right, anybody with any more questions? Surya, we will count from low, we will count from the low or from the high. All right, Surya, when you start counting for Elliott Wave, it is advised to keep a very broad time frame in hand. Start counting from at least a few years behind. That way you'll be able to at least, if you catch a major low, when you start counting, you should always start counting either from a major top or a major bottom. So that way you will be able to make sure that you've started your counting of the motive wave or the corrective wave from the correct point. And always start counting with the motive wave, obviously. Alright, Varun, for the new learners, how can we understand the waves and charts? Varun, let me give you the name of the book which I have used for creating the presentation. It is an extremely nice book. It is called Elliott Wave Principle, ELLIOT, Elliott Wave Principle, Key to Market Behavior. I'm typing it in for you. Key to Market Behavior by Frost and Fletcher. So this is the name of the book. Anybody who's interested can definitely go through a read. It's a very good read. It's a bit complicated. You might find it difficult, but a couple of reads will definitely help. Hiren wants to know, how does the wave move as per Fibonacci after completion of a triangle? Alright. How does the wave move as per Fibonacci after completion of a triangle? It's a very vague question, Hiren. I could not really understand what you want to know. Kindly reframe your question. Surya has a question, is Elliott wave related with time frame? Yes, it is. When we were discussing Fibonacci when we started, we said that it can be observed in both amplitude, which means price levels, as well as in time frames. But calculations in time frames are extremely not so reliable and not so studied upon. But when you read this book, you'll see that there are excerpts from findings of Hamilton or lots of great names in the field of Elliott waves, and over there you will see that they have indeed predicted great bottoms and tops nearly decades ahead. So it is possible, and yes, looking at Fibonacci relations between the time, the time lasting it does help in analysis. So how Elliott wave differ from neo waves? Surya, I don't know about neo waves, so I'm sorry I cannot comment on that. Alright, Conrad, time frame is the basis. Yes, Conrad, if you want to look out for wave forms and wave degrees, the time frames is what you need to make sure you're going right. Hiren wants to know, wave B and wave 4 have triangle. So either wave C or wave 5 must move some percentage Fibonacci. How do you determine that? See, usually what happens is when triangles are formed, the next wave, it retraces that triangle to a great extent. Alright? So when you've got a wave B, so you've got a 5-wave structure and you've got a wave B, and in place of wave P, you've got a triangle. So the next wave that comes is usually a pretty sharp wave, and there is no way to predetermine what the next Fibonacci ratio will be. Fibonacci ratios are reliable guidelines, but they are not stone lines. I mean, you cannot absolutely draw it on the chart, and you cannot depend on it that this is where my correction is going to end, or this is the target for my motive wave. That is not how Fibonacci or Elliott wave works. Yes, there is a lot of subjectivity, but if you combine the principles and guidelines which have been given, then you will definitely be in a position where you can rely and talk about your Elliott Wave analysis. So Varun, you can briefly summarize the presentation. We can easily memorize these things in finger topics. Varun, I'll be giving you the presentation. You can go through it, and if you want me to summarize it, sure, I'll do it. So in the first part, we spoke about introduction. Let's skip that. Then we came to the basic tenets. In the basic tenets, we discussed about the 5-wave pattern, the 3-wave corrective pattern, and the complete cycle, which comprises of the 5 plus 3 waves. Then in the third part, we discussed about the 3 consistent aspects of Elliott waves. The 3 consistent aspects which should not be violated no matter what, and if your wave counting is violating those aspects, then your wave counting will be wrong. Okay, so let's take it from the top, side by side. So this is these basic tenets, the 5-wave pattern. We discussed about the wave mode, the 5 wave motive waves, and the 3-wave corrective waves. Then we discussed about the complete cycle, which comprises of 8 waves and 2 distinct phases, the motive and the corrective. Then we spoke about the consistent aspects of Elliott wave as visible on your screen. Wave 2 never moves beyond the start of wave 1. Wave 3 is never the shortest wave, and wave 4 never enters the price territory of wave 1. Hiren, yes, triangles are extremely complicated, and what is seen is that when a triangle starts unfolding on the charts, people usually stop the analysis of Elliott and take up different tools like indicators and candlesticks, or they move into Fibonacci chart patterns or other various chart patterns. So see, in technical analysis, what happens is that you can never depend on any one particular discipline. Somebody who is using Elliott wave has to use other disciplines like candlestick charts. They have to depend on indicators, maybe Bollinger Bands, or maybe RSI, maybe MACD, maybe moving averages. So you have to have 3 or 4 different methods of analysis, and in order to come to conclusion, you have to have a cluster of evidences which you combine in order to make sense of the analysis. So when triangles unfold, it is very difficult to determine whether your analysis is going right or wrong. So it is advisable to stay patient and wait for the triangle to completely unfold. Yes, Rain, Elliott wave is indeed subjective, and this is why many people condemn Elliott wave. But those who have had the patience, the hard work, they definitely have reaped results, because Elliott waves is not a theory, it is the truth of the universe, you can say. It is what tracks the psychology of the market participants, and human tendency, human behavior can never be predicted, but Elliott Wave has done a great job in summarizing and condensing that particular behavior of the human participants in the stock market. Thank you, Irene. I do too. All right. So going back to summarizing, so wave modes, corrective and motive, we've blabbered a lot about motive and corrective. I suppose you shouldn't forget that in your sleep also. Important takeaways. Motive waves don't always lead upwards, and corrective waves don't always lead downwards. Mode of wave is determined by its relative direction. This is a very, very important point, that the relative direction is what determines the mode of wave. If you have this in mind, there is a high chance that you won't get confused in your studies. You have to remember fractalism. When you're seeing a particular formation on a chart, you can expect that particular formation to unfold on a larger degree on the same chart as well. There are different wave degrees about which you need to remember. So there are 2 motive waves, the impulse and the diagonal. The major difference between the impulse and the diagonal is that in an impulse, Alright, so there is someone who is asking the question, if it's so good, why there are recessions? What do you mean why there are recessions? Elliott wave does not determine the wave movements, it defines the wave movements. Alright, so yeah, the difference between the impulse and the diagonal. In an impulse wave, wave 4 will never touch the territory of wave 1, but in a diagonal, the wave 4 will always enter the territory of wave 1, and impulse has breakup of 5 3 5 3 5, whereas diagonal has a breakup of 3 3 3 3 3. Surya wants to know how we differentiate impulse in ED and LD. Okay, what is ED and LD again? Surya, please define ED and LD for me. In the meanwhile, characteristics. Oh, ending. Okay, how we differentiate impulse in ending diagonal and leading diagonal. We've discussed that ending diagonal. Okay, let's open the picture of a diagonal for you. Yeah, so this is an ending diagonal on the chart, all right? And you want to know how are you going to differentiate impulse. Oh, you mean how do we differentiate impulse from ending diagonal and leading diagonal? As I said, in an impulse, the wave 4 will never touch the territory of wave 1. But in the diagonal, may it be an ending diagonal or a leading diagonal, wave 4 will always enter the territory of wave 1, as we can see over here. Here, wave 4 has entered the territory of wave 1, and it will always do that. But over here, we can see this entire form is actually a impulse, and the wave 4 has not come anywhere near the territory of wave 1. You mean the principle cannot be used to extrapolate? No, you cannot extrapolate the market. I mean, you surely can wish, but then extrapolating the market, I haven't been able to do that. Alright, so that is about diagonals. Any other particular topic that anybody would like to discuss or have a go through about? So we'll wait 5 more minutes for questions and then we will end the webinar. Thank you so much for listening, everybody. And what topic will be taken? Conrad, why don't you suggest on our eLearn Markets Facebook page what topic would you like to discuss? What would you like to hear on in the next webinar? Diagonal, okay, I missed the question. Diagonal is equals to rising wedge. Yes, Bhargav, you are absolutely correct. So wedges and double tops and cup and handle, the triangles, ascending, descending triangles, they are a different, you can say a different field of technical analysis. And naturally, the diagonal when it is formed is by somebody who's marking Elliott waves will be seen as diagonal, and by somebody who trades chart patterns will be seen as a rising wedge. And if you look in to the details, rising wedge is also followed by a very strong move, and we've discussed that diagonal is also retraced sharply. So diagonals are not just follow sharp movements, but they are also followed by sharp movements, and that is exactly what happens in the case of a wedge. So they are actually the same thing with different names and different perspectives. Alright, Surya, if in the chart what you have reflected, if movement of 3 cross the trend line, what would happen? It's an extended 3. By trend line you mean the upside trend line. Firstly, when the wave 3 is unfolding, alright, when this wave 3 is unfolding, you don't really have a trend line, because in order to make a trend line you need at least 2 points. So the question is not really valid. Or I'll see the chart. Okay, if 3 the trend line. How about a session on overcoming the emotional aspects of trading? Yes, will be beneficial on the beginners equally. Conrad, we already have a recorded session which is on the emotional aspects of trading. You can go and look up the page of elearnmarkets.com. You can even call up Elearn Markets at the number which is given on the page, and you can ask for the video sessions. It will be sent to you. Okay, wave 5. You want to know the personality of wave 5, Mr. Surya? So wave 5 is always accompanied with a lot of positivity in the market. So let's take a look at this chart of Nifty which we have, right? There, let's go full screen. So when this top of 9,100 or approximately 9,000 was formed, you'll remember that there was a lot of positivity in the market and everybody was talking about extremely high levels, alright. So this was the fifth wave, alright. If you want me to draw a division, we already have that, alright. Okay, so on this chart of Nifty, the fifth wave, so this over here is the fifth wave, alright. And you will remember that when this top of 9,000 was forged, everybody was extremely positive about the market, and people couldn't stop talking about the level of 10,000 or 11,000, which will come within just a month. People were betting money, not just speculating. It was rampant. In fact, many people did not even believe that the market has actually started falling when it did. Alright, so that is the typical characteristic of wave 5. In fact, when I was also active in the market naturally at this time, and looking at the report of different brokerage houses and the statements which were given by all those analysts and market participants on different news channels and everything, it was a huge, the bell, it just rang in my head. Anybody who's studying Elliott will definitely hear the bell when there is a lot of positivity and the newspaper is talking about a lot of speculation and everybody is confident and everybody thinks that they can put money and reap returns in the market. That is a sign that you are riding the wave 5, and it is best to take your money out of the market because cash has much more value than stock when wave is at wave 5. Surya, ma'am, can you show the inner count of wave 3 in this chart? Alright. So the inner count of wave 3 in this chart is a bit complicated, alright. So how I count it is this. Okay, so wave 1 for me goes 1, 2, wave 3, wave 4, wave 5. I believe this wave 3 is an extended wave. And what is the current status of Nifty as per the wave theory, in which wave it is now? So what I believe is the correction has ended and Nifty currently is in a new primary wave, and it looks like Nifty will definitely be climbing up levels. Amidst this confusion of Brexit and everything, people doubt that there will be a lot of pressure coming in from interest rate problems and international problems and everything. I think leaving the fundamentals alone, purely based on technical analysis, I really believe that we started a new primary waves, and this high of 9,000 will definitely be reached in the days to come. How can we draw the flow and charts? Is there any new course for that? Draw the flows, Varun, I'm sorry I didn't get you. How can we draw the flows in chart? You can't really draw the charts. There are softwares available. What I'm using is called Investa. I'll type it in for you. It's Investa India. You can buy the charting software. You cannot plot the charts. It's extremely difficult. If we count from 6825 and 8307 then. Surya, you can get in touch with me on Facebook if you want a detailed breakup of the Elliott Wave chart, because I'm being told I need to wrap up this particular session because our time for the webinar is long over. So thank you so much attendees for listening. It was a pleasure taking this webinar for you. Do let us know what other topics you would like to listen on. Do visit our Facebook page and do visit our website. You will see lots of interesting topics which will definitely be very helpful for you. Thank you so much.